All right, everybody, welcome to CyberBulls. So today we're going to talk about Tesla's earnings. It happened a couple days ago. We've got the bulls here with us, and we're going to have everybody give us their expert opinion. Plus, in the second half of this show, we're going to do a deep dive. Alexandra Mertz has prepared another one of her epic deep dives, this time on China, China's geopolitical risks that are happening right now, and the auto market there as well. So look forward to that. Welcome, Alexandra, Xander, and Jeff. How's everybody doing?
Perfect. Why would we
All right,
do otherwise?
let's do a quick
hanging in there.
roundabout very quickly. So the Tesla earnings call happened, and some people are calling it a disaster. What words would you now that you've had a few days to think about it, what words would you give to that earnings call? Start with you, Alexandra.
I'll use a French word, which is déjà vu. You probably all know that means we've seen that before. I had my coming to Jesus moment with these earnings calls about exactly a year ago. I wrote actually a Substack on October 15th last year about I don't want Elon on the calls anymore. And after that, I had some reflection. And I told myself, okay, so if you can't stomach it, how about you get out of the stock? And at that very moment, it just became so clear to me that I don't want to be out of the stock. This is the transformational company I want to be in. I spent my time on analyzing. There's so much good about it. And that's actually improved the last four quarters. I just have to take it. And so since that moment, these earnings call got much more digestible for me. And when I hear people today say, oh my God, such a disaster, whatever, I mean, we're going to hear what Xander and what Jeff and what you have to say. I've was very detached from it. And yesterday evening, I even felt, the real necessity to thank the team. Of course, it was Elon how he is, how sometimes even unprepared he is, and how he really shares thoughts. You have the feeling you're actually sitting in that control room with him, and he tells you everything that he just comes to his mind and he stumbles upon and wants to transmit it. But as raw and it's sometimes, unpleasant it may feel, it is honest. It is coming out of his brain and out of his stomach, the way he wants to bring it to us. And it usually has a lot of little indicators of where he currently stands and where he wants to direct this boat to. So I found it was interesting. I'm going to do what I did last time as well, let it settle a couple of days and then re-listen to it from beginning to start at a slower pace. Also because the transmission yesterday had so many little bugs in it that I just want to make sure I catch everything. And I'll, make sure I reflect on it. But it doesn't bother me more than that. And it gives us very good entry levels for new stock purchases.
Thanks, Alexandra. Xander?
I'd say it was one word, FOMO-less. I lost the little bit of FOMO that I had. So I think it's a very sobering reality of, even though the market's on an uptrend and recovered, but we've had some decline here. The question for me is whether we have Tesla specifically, not the market, but Tesla can have a rally into the end of the year. So I think it's just it's like a test of your conviction and whether you believe the story and think that the rest of the traders or investors will buy the dip.
Jeff?
Yeah, I'd say the one word is unbalanced. There's a lot of great things happening at Tesla, from Elon and his leadership and the team. And it felt like all of those kind of gold nuggets were just kind of wrapped in this blanket of like misery. And just like I was actually going to go read the transcript and kind of like mark positive, negative in terms of sentiment. I'd have to think most of the call had negative sentiment. And this isn't really about you want to hear everything. You actually want to hear what all the risks and opportunities are in the company. But I didn't feel like we actually heard all the opportunities. Have they modeled the implications? I know we're going to talk a little bit about the IRA later, of going to point of sale. How close is a fully autonomous solution from the last time you updated us? In July, you told us that you're in discussions with a partner on FSD licensing. Where's that at? So I think there's, it's interesting, like the word Xander used. Yeah, it's hard right now. It's a little bit difficult to process in terms of like what are the catalysts between now and some next period of time. And you're starting to think about a little bit about this particular position. I've been in this name for over 10 years, and not really done a lot of trading. I've done some trimming and some trading here or there, but mostly basically a core position. And it really, because you didn't really get any understanding or termination of okay, how do you see the rate picture, or sorry, the pricing and gross margin picture shaping up? Are we 80% through it or not? And I also found it to be kind of like almost prescribed to go that way, because there's publicly available data out there regarding the plan for interest rates. There's a plan out there. You can make a plan for your company. You can say that I don't believe that plan and I'm going to hedge it. You can, but then okay, then what's that look like for the company? So there really wasn't this connection to like where are we going, like on these risks, like where are they going, how do they terminate, and then really just not enough time on what the company's doing a really good job of. So it's difficult because when you look at the other names, if you're investing in auto, EV, high tech, it's still one of the most exciting names given the projects, given what they're working on. It's just trying to take like current performance, current results, and connect it to what the possibilities are in the future. And the company didn't do. Most companies do that. Most companies try to make that connection of like, hey, we're having a little bit of a rough patch, but this is what you should look forward to, and this is kind of this is how we see our path to get there. And they really kind of almost I don't say clip that path, but it certainly obfuscated it on the call, and there were specific questions that weren't answered. So I'll pause there, but unbalanced is kind of the one word that comes to mind.
Well, you took the word right out of my mouth too, because I was going to say unbalanced. Honestly, I was.
Hmm.
So normally in these kind of calls, Elon is very, very honest, and he just shares with you exactly what he's feeling and what he's going through right now. And right now, it is production hell with the Cybertruck, and it came through loud and clear, right? He does that, which is great. I actually really prefer a CEO coming out telling you exactly what's happening. The problem was in every other earnings call, he does also balance it out with kind of comments about the future. This time he did talk about baby AGI. He talked about the robot being able to do, it's next time you see it in a year or so, it might be able to do ballet. He talked about, the unboxed model and the next generation vehicle that, and talked about robotaxi, right? Being able to, same things he's always been saying, 5 times your uh, use of your car plus we're going to become a hardware company with software margins. Somehow though, those comments kind of fell flat. And I think it was his mood, right? He just wasn't excited about it. He just kind of just said it. And that's what happened. And so we all came out of there with kind of the somber kind of feeling. So I will share later what happened with the institutional investors. And so they definitely all went and did a downgrade for the stock based on what they saw yesterday. One of the big reasons they did that, though, and I think is one of the biggest issues we need to talk about right now, is do we think that gross margins is going to be flat next year? And did they, was so clear about how that interest rates being so high that they might actually do price cuts. So, Jeff, I need you to come back again because you had a fantastic tweet reminding people that in January, the IRA credits can be point of sale. And doesn't that mean a 7,500 price cut right at the moment of sales? Why don't you explain that to folks?
Yeah, I think we should put it in context. I mean, the North America, the U.S. is about a third of Tesla's demand. And in the U.S., starting this year, there was a credit that you could claim on your taxes if you were carrying liability on your taxes. You could claim a $7,500 credit against a Model 3 or qualifying Model Y, and now even some qualifying Model X's near the end of the year. And that's been the rule this year all the way through the end of this year. I think it's difficult for people to kind of connect those two things together. Number one, when you buy the car today, even if you have plans to claim that credit, you're paying for it. It's in the, if you're doing a lease or you're doing a loan on the car, that 7,500 is still in your total. It's not extracted, so you're paying interest on it. You're paying the monthly payment on it. It's still in there. Then all of a sudden you get to April and you file your taxes. Whenever you get your tax return, whatever month it is, then you'll get. And if you have a liability, you got to know you have a liability too, by the way. Then you'll get. You could claim the $7,500 credit, but by then you're paying interest on it because it's been a part of your loan the whole time. So not a great solution. I don't know how many people this actually connected with. I mean, it'd be a great question for Tesla to understand. It's a great deal because it's literally, depending on the price of the EV, 10 to 20% off the price of an EV, of a Tesla EV specifically. But again, I think that struggled, with the implementation of it. Now, January 1st, 2024. So we're going to go to sleep, New Year's Eve, party, plan for, have a happy 2024. Wake up, you'll be able to go into a Tesla store on, January 1st or 2nd when they open, and you'll be able to claim that credit at the point of sale. So literally, if you're buying the 43,990 version of the Model Y, you're going to be able to subtract that 7,500 right there at the point of sale. And it's going to be, 36 and change. And then that's the amount you're going to finance. And that's the amount you're going to do your lease on, your finance, or however you're going to do it. So that's a game changer. That's 10, depending on which Tesla you're buying, it's 10 to 20% off. And I don't know if Tesla, I mean, that's a price cut on 1/3 of what Tesla ships globally. So the question is have they properly modeled this? It's huge. It'd be a huge uplift. Is that the price cut for 2024? Is that what Tesla needs for 2024? Final comment. There's different incentives in China and so forth. All I'll tell you is that the margins and the COG structure of a Shanghai built 3 or Y are much different than in the US. I think they still have a lot of room in China for some pricing moves if they needed to do them, and it wouldn't, be a huge detractor on gross margin. So this thing in North America with the IRA could have really big implications on January 1st, and just there wasn't really a conversation about it. So I think it's important to call that one out.
No, exactly.
I think there's a good reasons why they're not insisting on it more than anything. First of all, obviously Q4 sales. If you tell everybody you're going to have in January 7,500 reduction, you think you're still going to sell anything between October and December? Probably not. The second point is it really going to be 7,500, right? I think we're still waiting for final confirmation which models will be at 3,750 and which ones will be at 7,500. So I think they tried to be quite prudent on that side.
Who here thinks that that there might actually be price cuts? We heard today that some people are saying even possibly tonight.
Thursday. It's like every Thursday it's raining price cuts. Who knows? I mean, I'm a little bit tired of having to try to explain to people if Tesla feels the need to cut prices, they will cut prices. It's not us screaming on Twitter that, it gives us headaches or whatever. That's not going to change anything. At one moment in one call, I think it was in a space in December last year, but correct me if I'm wrong. I'm always very bad in this timing. When was that? Elon said that he was even prepared to bring it down to 0% if it had to be, putting it straight away into question, saying, I don't think that's going to be necessary. But when you have a CEO, who's obviously the most influential person in that company, with that mindset, so laser focused on FSD, because we all have to make very clear we understand. If you're in Tesla for the car business, you're very likely very unhappy today, right? The Cybertruck seems to be difficult to scale. It's going to take time. It's going to take more money. I have the feeling they have, a lid on how quickly they want to expand certain models in certain factories. So if it's only for the car business, you probably ask yourself some questions whether you're in this stock and should be in this stock for the next 6 to 12 months. But if you're in this stock for the company and the potential of full self-drive, of AI, and of all these other projects, because there's so much more coming, right? Dojo itself could be a product. Electric power trains could be a product. There's so much more to it than what we currently see just from the car business. Well, then this shouldn't worry you. It just shouldn't. So that's really the point where we are, where people today can disagree or agree. It really depends on how much tangible, good news that you can, digest and dissecate and put into your models for the next 12 months you need to be able to stay there, or how much further you can extrapolate their plans.
Okay. So obviously the institutional firms, they actually saw that they believe that the margin's going to be flat, that there's going to be more price cuts. The Cybertruck didn't give them confidence that it's going to contribute to cash flow profitability until the following year. And so Stephen Bink on X shared this with me, and he tweeted this out, which shows you the kind of the reaction by the analysts. And you can see that Morgan Stanley, Adam Jonas, he went down from 400 to 380. You got Dan Ives from Wedbush. He's now down to 310. He was at 350. And then you've got Canaccord, for example, now at 267 from 293 to 267. So everybody went down. So Xander, what's your thoughts in terms of what the impact is of institutional firms doing this? You're very good at tracking the stock movement. What is your technicals sharing you? What's your expectation for what's the stock reaction going to be in the next week or so?
I think the downgrades, impact that overall sentiment. So my question, like I described with the chart that you can see in the background, we kind of had a question of which way is it going to go. Is our earnings going to be flat? Will people see that the margins of kind of trough there? So it really, what it went from like 18.2, if I remember correctly, to 17.9 in automotive gross margin. So it's not like a total disaster. But then you look at some other lines lower on how much actual earnings they had, and that dropped because they're investing in growth. So I think that with this measured approach of cautious approach of moving growth up, it's like everything is hold. It just hold the line at the moment, and I understand it. I think I think it's a little bit of an overreaction in due to Elon's tone. He didn't sugarcoat it at all, and I do agree with that sentiment of managing the call and just stick to the numbers. I mean, the numbers are what they are, but it's the saying like that Cybertruck isn't going to make money for worst case scenario. That's the point. Is he's just really worried about that worst case scenario, and positioned the company to be able to absorb that. So I think like that part of it is really smart, and but we already knew that. So where is the growth in earnings going to come from over the next 12 months? And I think that's like the ultimate question, and I think we should talk about that. Where does it come from? Is it more FSD? Is it if analysts are looking at only the next 12 months and they don't see a reason to be in the stock, then we could be long-term investors all we want, but if there's further downside, people are going to capitulate. They're going to let go of their shares because they might want to put it in another name. I kind of wish Christian was here so he can share what he thinks about it. But can we go back to that question? Where are the earnings going to come from? What do you guys think?
That's a very good question. I had actually a debate at home today. When do I expect FSD to be a significant revenue bringer in one form or the other, right? AI, FSD, whatever. And in my bear case scenario in my head, it is 2026. And then my husband said to me, 3 years. I mean, we can't wait 3 years. And I said, of course we can. What is 3 years for a truly market-leading worldwide product? I mean, I know I see these geofence videos from China as well. I know I see Waymind, whatever. But if we want to have the full solution and be, completely prepared for it, I'm prepared to wait 3 years for it. Of course, I hope it's next year. But if it's 2026, if that's what, it has to be for us to, get authorizations, make it a market-leading product everywhere. Of course, Europe will be later than China and the United States. That's all fine. So what we have to do is make sure that by then we have other products. I actually think the robot may be a profitable product before FSD is a product, just because it's not killing people. It's for simple tasks. It may be much quicker amortizing. It's research and development, and the rest of it will initially come from cars. And I do still believe, I'm a firm believer, that selling the electric powertrain to other OEMs who are in dire need of them, who can't make them, is going to be a major source of income.
Yeah, in terms of, I think the comments around catalysts and EPS growth, the catalyst I was hoping to hear an update on was the FSD licensing, and hopefully maybe we'll hear something soon. I don't think there's any necessarily timetable other than if companies want to partner with Tesla and they want to launch in a couple of years, they'd have to start working with them pretty quickly. So I think that's one area where you can get some catalyst or some growth. I mean, the Model 3 Plus, how's that doing? It looks like everything that launched into China, it's not available for sale yet at the end of the month, but it looks like new orders are opened up, and it's 6 to 9 months of waiting time. So, sorry, 6 to 9 weeks of waiting time. So, is there something behind that? Are they just building for Europe right now? It's probably what they're doing. But, anyway, it looks like that's off to a good start. Could that be a catalyst? We'll have to see. And then, the Cybertruck is going to be a catalyst, because as soon as there are hundreds and thousands of these out there, people are going to wonder that have never seen an electric car before. They're going to walk up to one of these things and say, what is this? How does it work? And then all of a sudden they're going to learn, oh, by the way, there's these other, there's brothers and sisters of this car, called the Model Y, the Model 3, the S, and the X. You may want to go to Tesla and check it out. So while, Cybertruck may be difficult to ramp up and build, I do think that they're going to sell the highest value trim first, because I think that they can garner the most, not only gross margin from that, but they can also charge the highest amount to those potential buyers. So I think you're going to get some decent revenue off a Cybertruck, even though the margins may not be there in the beginning. But the other thing is energy. It looks like energy is on a decent ramp up. They're only using about 40% of the capacity in that factory right now. So let's say they get the utilization up to 80%, which is a good solid floor for a factory. That would be double the output today. And they're already throwing off free cash, 24.5% gross margins. Yeah, that's going to be lumpy, but also now the services and other revenue should start kicking in, software revenue from energy. So that's looking pretty exciting. In terms of, you could get a little bit of EPS catalyst out of that. So we'll have to see. And then again, finally, I go back to the IRA in North America. This is a big change. 95% of married couples filing jointly make under the income threshold required to get a Model 3 or Model Y rebate on site. And it looks like there's a decent chunk of people that are above a decent income level, so that they actually make enough income to own the car too. It's not just everybody below that curve I was looking at. So I think there could be a decent pop from that too. But the companies also, ultimately they have to actually comment on. That's a great question, and they ultimately need to comment on. We certainly got a good dissertation of where all the risks were, but we didn't hear near term, what are the different opportunities again in the near term that we can latch onto.
So the reason I invested in Tesla was because of the sheer number of industries and businesses that it's addressing. It. But the foundation, of course, is the secular electric vehicle revolution. And a few years ago, I've been investing since 2012 because of just electric vehicles. And of course, as the years go on, they start adding energy, they started adding bots and all the robotaxi and so forth, right? But I had hoped that with the gigafactories being launched, that was the key thing we were looking for, that we would feel comfortable with the, hitting these 50% growth, which we actually are. The problem is because of macro, the margin has been compressed. So now this secular growth, it's still absolutely happening, but we have to wait until the macro turns. And so I think that next year, I do believe that the macro will turn. And when it does, the margins will either come back or the sales will increase, and we're going to start feeling more comfortable about that again. But in the meantime, vehicle sales is no longer kind of the thing that creates the foundation, and that's where you see the institutional firms reacting to this and downgrading. And so now it's becoming back to a story stock, which it has always been, because Tesla is an innovation engine. They're no longer an earnings engine, but they're an innovation engine today. And so we need to kind of wait for one of these things to happen. FSD licensing. I do agree, though, that the January 1st IRA credit is going to act like a price cut. And so people will then feel comfortable about that, because it's like this worry that there's going to be even more price cuts and the margins will be continued to press. But if you got the IRA coming and then you've got the macro turning, now you're waiting for something like an FSD licensing. You're waiting for the bot to be shown. You're looking for the Dojo computer to improve. So unfortunately, we're back to becoming a story stock. We need to see FSD improving, and we're hoping that one of those things will hit sometime next year, and it'll turn us around again. But so let's let's talk a little bit about. I wanted to show this, which is Dalton Brewer had this tweet, which I thought was really well written. I'm not going to show the entire tweet, but basically, he's very bullish on Tesla. He said Tesla's not an ordinary company. They don't play by the books. They don't have boring calls like Apple that Wall Street loves. So, obviously Tesla bulls complain about Elon said what says on the calls, but he went and listed out all the things that just put everything in perspective. And I like this list. So energy is a sleeping giant, highest grossing margin ever, record profit. We have a Cybertruck delivery date, 11/30. Significant progress in bot. It's going to be able to do ballet at some point. Significant progress in FSD. V12 looks like the best update ever. Record cash pile of 26 billion. Largest charging network on the planet. And then we just heard that Toyota is joined us as well. Cost of goods continue to go down, ramping multiple factories. Now, Giga Mexico may have been delayed. We'll talk about that. But that doesn't mean that the compact car is being delayed. Robo-taxis coming, Dojo's coming, Model 3 refresh is arriving. Semi has a good future. Roadster 2 is hopefully coming soon. So it's a good list. What do you guys think about this list?
Yeah, can we pause there for a second? I want to go to that Dojo, and you mentioned it, and I had that written down. You don't got to put me on the screen. I think it's a quick question for you guys. So when does that AWS moment come in your mind? When can we start monetizing that? Because I'm trying to find that part of the story in the FOMO with people. And if the analysts can take down the stock, but this is okay. So they took it from $800 billion company to 700. Are we going lower? Trying to think about it. So what is Dojo like? Isn't that this ability to sell compute? Isn't this on the horizon with what they're saying with becoming a supercomputer?
I don't think it's on the horizon. It is a potential that once they build out the Dojo supercomputer and the other supercomputers that they have, that they might sell it to other companies. But even Elon said that that's something that, kind of in the future, we don't know if that's going to happen. But if it is, it's going to be a massive seller. So in the meantime, what do you have? But 2024, you're going to be able to say that by January, Dojo is already online, right? They turned it online in June, but by January, it's going to be, the largest supercomputer in the world. By December, if they continue to invest $2 billion into it, it'll be 20 times more compute than it was this year. And then they've got 2 other supercomputers that they've got online as well. So all we've got is in 2024, people will start realizing that Tesla has the largest supercomputers in the world. And that's really it, the story that they have that. Right. When does that translate into cash? Probably not 2024, except for FSD. So I believe that if FSD version 12 works better because of this massive supercomputer jump, then they will be able to sell more FSD because it sells better. That's going to result in a bottom line. Margins will go up. That's what we're going to see in 2024. That's my expectation.
Go ahead, you guys. I want to hear what both of you think.
Yeah, I mean, it could very well be that Doja becomes a commercial product, right? That other people can use it and can have, access to the services. But it could also be that Tesla needs all the compute power by itself. So that's really, one of those miracles of Tesla. It could become more profitable by its own use for Tesla, or it could become more profitable because they're not suddenly giving it to third-party access. Who knows? That's one of those FOMO moments where I just feel like I want to be in it because either way it's going to work.
Yeah, it's not something for the near term, but it could be something fairly significant. It's basically these almost like option plays for various aspects of the company that you have to think about and consider. It's a good list of things, but it's a lot of it's more qualitative and not quantitative. And that's what Tesla has to do between now and their chat GPT moment, is they've got to show that they've got they have the best car hardware business in the world. And quite frankly, on the EV side, they do. And well, put your chest out and tell that story and say, look, we're under a little bit of pressure and compression right now. This is how we see it playing out. Here are the risks. Like, we see it can go from here to here. Here's the extent of it. Here's what we're doing about it. We're the best in the world at taking COGS out. Look at this reduction curve that we're on. This is what we plan to do going forward. Nothing is guaranteed. And it just, by the way, the rate conversation, I agree with it because it's taking the total cost of the car up. It's just a dangerous thing to make it, a big portion of your story of why you're under pressure. And here's why. Why are the rates going up and why may they go down? And if they go down, is it for the right? If rates decline, is it going to be for the right reason? Are a bunch of banks going to fail? Are a bunch of larger companies going to fail or capitulate in this time period? Since the last time the Fed hiked, the Fed has been doing quarter point hikes, pausing, but since the last time they've hiked, essentially the 2-year, the 5-year, they're up like a full, a full point. Like, they've had basically the equivalent of 4 hikes done by the markets themselves. So there's tightening that's occurring, even outside. Now the Fed's out there, they're barking and kind of like cheering it on. But on the other side of this, when the Fed actually starts to take rates down, by the way, the estimates on that are best case middle part of next year, more than likely the latter part of next year. This is a long time. You're talking another year like this. And so what other tightening is going to be occurring? There's liquidity being pulled out of the market. There's quantitative tightening. There's all these things happening. So I think if the Fed starts to have to reduce rates in let's say it's an emergency in a couple of months, they do another quarter point. Now it's a story with Tesla. I mean, now people are going to be looking at Tesla and saying, are you selling more cars now as a result? So I think tying it too closely to that story is a little bit dangerous. But I do understand the math, and I do understand that the implications on the family budget as well, of like, look, we can only afford so many things in the house. Totally understand that conversation. I just think Tesla needs to note that and note its importance and move on and talk about what they're doing to counteract it. And not, not in a way of like, we're digging a tunnel with a spoon, but really like get into like, this is how we're approaching it.
Mm-hmm.
And this is our forecast. This is our projections. None of this is guaranteed, but this is how we see it happening.
Yeah, and rather than hoping for a soon to come Doja moment, which I think we're not there yet, because I think, like Herbert said, they are prepared at the moment to invest the full free cash flow into chips, right? That's what they are doing. You can really see it from yesterday's balance sheet that's what's happening. Rather than that, I seem to be the sole soldier going for these electric power trains. Selling an electric powertrain to another OEM can be a very lucrative business. Adam Jonas quantified it at $1.7 million electric powertrains per year. We may get to 1.8 million cars this year, meaning they would sell as many electric powertrains as they're selling this year cars. This is not in the same year. 1.7 million is in 2030, 1.8 million is this year. So let's not confound them, but just in number, in size of market share. I published yesterday a research, I think it was from Ernst & Young, but I don't remember. It's in my Twitter feed. Those people have researched that they think the OEMs by 2030 need between 36 and 56 million electric powertrains per year that they're going to subcontract, like always, to their tier one providers. I do believe Tesla will be the number one tier one providers to other OEMs. So this is not, some fantasy out there. They are today producing the best electric powertrain. They know how to do that. This is what Tesla is all about. So you have two elements in the car. You have the software leading to FSD, may take a little bit longer than we all expect, but you have already the hardware, the battery sourcing, the right chemistry, the whole everything that will be able to be sold to others at a very, very good rate.
I like that. Yeah, that's a great point. And that list, it just, the deck itself did the opposite of highlight that those vehicles or those the things listed on there are coming. And things like the factories aren't, Shanghai is going to pause. Germany is kind of the same thing with Austin. So they built out the capacity, but it's like the company is waiting for an all clear in terms of growth. But then on the on the investment side, they're not afraid. So that's the part of the business that that's why we invest. I think that their ability to allocate capital is the best in terms of management. The calls, that's debatable. I think I do agree that I love that tone that they have, which is, this is reality. We're prepared. But right now we're all having especially analysts are having a hissy fit over it. And do you guys think that like it's a warranted reaction in terms of like that's the reality of the numbers? Because if you're right, I think we saw some of the analysts hold or didn't change their positions. Do you think that it's a good idea to take down the numbers? Is this an opportunity to buy, or is it?
You mean the price targets? I mean,
yeah,
the price target is
targets
ridiculous. I mean, come on. How many price targets did we get wrong since you followed the Tesla stock? I don't even recall anybody having gotten ever the price targets right. So I'm not even following those. What I do believe is they're always very quick in 5-second psychology analysis of these calls. You hear the first one going, "Oh my God, Elon was depressed," and then you have 50 others following the suit, and it just becomes a self-fulfilling prophecy. So they'll get over it. Tomorrow they have something else to talk about, and that's it. I think it should just be ignored. I think one thing we have not at all taken into account enough was what Drew said about the 4680 cell production lines, because that really shows where they are expanding. And again, communication could be better. Again, I've come to terms with that a year ago, so I'm not going to complain about it anymore. But if you allow me, I would just like to read slowly what he said. It was about 4680 cell production in Texas. He said it increased 40% quarter over quarter, 40%. Congrats to the Texas team for producing their 20 million cell off of line 1. Texas is now a primary 4680 facility. We're heavily focused on quality. Scrap is down 40% quarter over quarter. With the increased volume and yield improvements, cell costs consistently improved month over month within the quarter, although we have a lot more work to do to achieve our steady state goals. And that is our priority. The Cybertruck cell, with 10% higher energy than our Model Y cell, starts on line 2 in Texas. This quarter, we convert to building 100% Cybertruck cells to simplify and focus the factory as we ramp all 4 lines in phase 1 over the next 3 quarters. So that's up to middle 2024. Phase 2 of the Texas 4680 facility is currently under construction, and the additional 4 lines, 8 lines, incorporate further capital efficiencies over phase 1, and our target is for them to start producing in late 2024. So all that is coming online before December 2024, if it works how they want. Lastly, in Cato, we're retooling to enable large-scale pilot runs our next-generation cell designs. So that's next after the current 4680. Cato's long-term goal is to be launchpad for new cells, 1 generation ahead of the mass production facility, which is now in Texas, obviously, enabling faster iteration and smoother ramp-ups and new designs. So one clear goal, and I'm sorry I'm coming to the energy powertrain again and again, is to have the best cells, right? To have the best cells for their own cars, and I'm coming to it again, for third-party energy trains as well.
Do they have enough supply of batteries?
With 8 lines, they will have. With 8 lines, you have no idea how much that is.
Well, what about ramping Semi and Cybertruck? And Jeff, I didn't mean to cut you off. You were going to say something.
I was going to say they don't have the best cells. I mean, their energy density is below many other competitors in the industry. So they've got work to do on that. And I'm sorry, one of the things that I think is now more clear to me, and Alexander's update was really good on the 4680, is the reason that Model Y mid-range car, that all-wheel drive, was actually removed is probably because what Drew was actually saying, it was a big cost drain. If they improve their scrap rate by 40%, they improve their output by 40%. Think of how many thousands of dollars extra that battery pack probably was in that Model Y rear-wheel drive, all-wheel drive. So they used that to get Austin ramped up. But then Austin itself also had probably a $4,000 or $5,000 drag. We saw when Austin was turned on what it did to the total COGS. So those two together were probably a huge drag on gross margin. So one of the things that just came to mind as Alexandra was just talking is like, that's probably going to be a huge win for gross margins in Q4, just to turn that model off, as it was low, it was high cost, low yielding, and that was being coupled in with the Model Y in Austin, which was also pretty, inefficient right now from the fact that they're not fully ramped. So I think the question on the 4680, or the downer, is these are now going into the Cybertruck, which has all these other constraints. So where are these cells ultimately going? Is there another spot for them to go? Are they at a price point where now that they're going to be better than the other stuff that Tesla's buying or building with Panasonic? I think those are some of the key questions that they have to get answered. But the progress itself is good. It's exciting. The question is, where does it go? And how does it actually help Tesla in the next couple of quarters?
Well, it's a good news that Cattle, which is next door to Giga Shanghai, they just launched last week, and they're going to have enough batteries for 800,000 cars per year. That's going to help quite a bit. Hopefully, many of that will go to Tesla. So I got a couple more questions, and then we'll move on to Alexandra's presentation. So what do you guys think about the CFO's performance? Taneja is, what his name? Taneja, Vaibhav Taneja. I got to figure out how to say his name properly. I know that most people felt that he was hesitant, that he was corrected 3 times by the other executives, including Elon. I actually thought he was good. I mean, obviously, they looked like they were all reading from a script, but I thought he was fine. But what do you guys think?
Muted.
Probably I should have not said. I was saying something nasty, right? The mic didn't want to go on. I didn't like how Elon interrupted it. I found Elon's way of cutting him harsh. But I guess that's it, working with Elon, right? It was his first call, so I'm giving him slack to have to get used to that. It was, it makes me laugh when I hear people today cry, "Oh, where's Zach? Where's Zach?" I mean, first of all, Zach's gone, and I remember so many calls where people were saying, "Oh, Zach was not at his best. Zach overpromised." Remember when Zach said 20% beginning of the year, and everybody was screaming. So, no need for nostalgia. That's just it. Give him another chance next quarter. If the second and third call are the same, we have a problem. But we don't have a problem just because of one missed call. Mike.
Herbert, you're muted. You're all muted.
Oh, I'm the muted one. I'm sorry. Is that anybody else? Okay, let's move on then. The last question I think is, people are concerned about the 1.8 million target, which I thought was really well stated in the outlook. Was one of the things was, they're on target for the 1.8, about 1.8. And yet people think that, they might not be able to get there because of Elon's comment that, you can't get 50% growth in infinity. Do you guys think that this long-term growth has, again, dampened the mood and made people realize that you can't count on growth of cars forever? And then they're slowing down the Mexico. Although, again, do you guys think that slowing down Mexico before he goes full tilt investing in it doesn't mean that they've slowed down Gen 3, because they did say that they're already doing the pilot line in Giga Texas, and then they said that we could expand Giga Texas. So they try to downplay this issue with another gigafactory. Thoughts on that? Jeff, why don't you?
Yeah, I'm thoroughly impressed with the Tesla team, the bench, and the leadership. I don't understand this over communication around, what product is going where, Mexico, what time, when is it starting. They don't have to communicate all this stuff to the public. They just don't. They don't have to do that. All they have to do is really talk about, they put their capacity plan in the PDF file, and they have to talk about if there's any meaningful changes to that they update that. And that's all they're owed. They really owe to the investor base. This whole thing of like, oh, we moved the Gen 3 vehicle from there to, by the way, that's a great move. I think it's a great move on Tesla's part. New factory, new product, terrible idea. Brand new product, existing factory, Austin, great idea, right on top of engineering. In fact, I think that could help them pull that product in from whatever schedule. They haven't told us yet, but I think that it would help them ship that product even faster. But the point is, they didn't have to communicate. This whole thing about, I'm worried about Mexico and until I want to see what's going on with macro, but didn't have to say that. That could be the plan internally. Didn't have to say that. So I didn't understand that. And then in terms of, I think your other question, Herbert, was around risk to the 1.8, or yeah. I think they're pretty confident in that. I mean, they've already done that production level. They've already done. They've already done the 479 right in Q2. So they've got a supply chain that can do that. My guess is they're going to be able to do a lot more than that. And they're going to have to build up some inventory. Again, I actually believe that they're under inventory in many locations. But we're not getting that inclination from anything else from what Tesla's saying. But I do believe that they'll be able to hold that. Again, this pricing move that they did in the beginning of the quarter was pretty decent, and then they added this Model Y, at 43.9, I think is the price. That's significantly lower than the one it replaced. The one it replaced was 10% higher, I think, at 47 and change. So those are pretty significant. Those are big moves.
Okay. Anybody else? Alexandra?
Like I said earlier, I still believe there may be some stress on Q4 numbers in the United States, just because people want to sit it out until the reduction beginning of January, the directly point of sale deduction. So I wouldn't, make a drama out of it if we don't get to 1.8 exactly. What the heck, what difference does it make? So I just want to warn to not overstate that, because there could be just this reason, very boilerplate reason for that.
Yeah, I'm not so worried about the growth for this 1.8. I'm kind of looking forward into 24, and I almost feel that they Osborne themselves with releasing the 3 plus. So so, but it's almost like it's like what Jeff was saying about what you need to say and what you don't need to say. I said this yesterday. I think like this 5-minute elaborate answer, it's not the place for an earnings call. Like I'd love to hear some random interview, but for the people that are everything's under the microscope when it comes to analysts' expectations, investor. So they just they it's almost like they put a lid on the growth of what we're going to see for next year, right? This whole 50% from the 2020 numbers or 2019. Like what does next year look like? I do agree that this whole fourth quarter, pause, hiatus, like that's I'm not so focused on that. I want to see is that demand actually going to spike, right? So does the FOMO come from the I mean, look, 6.5%, 7%. These aren't crazy, interest rate numbers to pay for a car or a business loan. The problem is like I have a 2.5% interest rate on my Y, so I don't want to touch that. So that's the significance of that. But then if it gets reduced, the people that have those interest rates, they kind of filter out of the system. Do you need to have the Fed bring the rate down? I don't know if that's what's going to cause it. I think more the fear of the unknown of what may happen. Jeff stated that earlier. Banks collapsing, that risk is causing them to pause, and I wonder, what do you guys think about that?
That's a very good point, Xander.
24?
I think that's a very good point. I think it's actually, and that answers partly the question Jeff asked earlier. When Tesla points out that everything is so bad, or when Elon points out due to high interest rates, and he said that I think at least twice, just wait, when interest rates come down, we will accelerate, right? That was his word. That's all good. But what actually lowering rates bring with it is that people just get so much more confidence in the future. So while you have currently a sclerosed housing market, and you probably have a sclerosed used car markets, because people just don't want to give up what they currently have as interest rates. Once you get into the feeling that interest rates will come down, you have much more confidence in taking a step forward, because you are not the last idiot who did it at the highest rate, right? You're not the last idiot who bought the house at the highest price before it came down. So there are so many psychological factors to it that will desclerose, if that word even exists in English, the current situation. It doesn't exist? Okay, well, I just made it up.
I don't think so.
Yeah. No, but I like the
what
first
I mean.
and last idiot. I'm usually the first idiot.
I'm the idiot.
So I like the first and last. There's two quick comments. I forgot. One is this whole thing about to Xander's comment about CAGR growth of like. First off, they didn't have to talk about Mexico, and they didn't have to say that we're not going to grow to the size that's greater than the mass of the universe. Like,
right?
It could have been. First off, the last 4 quarters, Tesla has shipped 1.729 million cars. That is
wonderful
50% CAGR growth in the
Yes.
rear view. I understand that. I know Gary made a comment on that. Totally get it. What are you going to do going forward? I totally get it. They didn't want to comment on it. And I mean, we don't have projections from other car companies for 2024 either. So I'm sure they want to see what the Q4 looks like. So I guess I lost my train of thought. There's one other thing I wanted to. The other thing is in 2024, other automakers, EVs for them are money losers. It's more capital intensive. They have to do more capital to get more output. Are they actually going to meaningfully grow next year? Probably not. And actually, Ford and GM have already said that. So what does that mean? The EV adoption curve, is that going to stop? Or is it going to go from 8% in the US to 12 or 13% next year? So the curve's going to go up, but these other competitors don't have the financing, don't have the unit economics to expand their to expend their capacity on EV. So does Tesla going to have more opportunity to ship more EVs because they're lower cost and they have the capacity? That's a logical conclusion to come to. I don't know why we couldn't have a conversation on that.
Love it.
Because it wasn't the mood for it. He just wasn't. And also give him a little bit slack. I mean, this guy is running 6 companies, is running Twitter, X, whatever, and has a lot on his back. He's currently having indictments. He's having a custody case of his the mother of one of his children. I mean, the guy has so much to deal with. He can get into a call like that.
Nope. That's an excuse. I don't buy that at all. It's his job, right? His job as the CEO. And again, I love the guy, respect him. But I mean, he's got to hear his investors and realize that even the employees, right now, yeah, employees will get a nice a dip in the stock price for the quarter, and they get 15% off. But at the same time, I know he doesn't care about the
shareholders.
The investor
he doesn't
people.
care about shareholders.
But at the same time, like what you were saying, I think that it's a responsibility. It's his fiduciary responsibility to the shareholders to communicate in a manner that is what he's being asked. So I respect him, but at the same time, he's got to hear that it's painful for even me, right? I'm all in. And I sold a little bit. So
let me ask you
to be able to absorb this. But
so let me ask you. So it was painful for you, but don't you think it was more painful for him? Wouldn't it be easier to just sugarcoat it and play Mari Barra, give a new PowerPoint and make it, just show the positives of it? I think it's actually I honestly think his persona is to just give us raw how he is that particular day.
Sure, but spend some time on what the positive catalysts are too.
He tried. I think his mood was just not there. Look, at the end of the day, what's happened here, right? It's really bad news for Tesla, but it's Tesla comparing against Tesla, and us investors hoping that there was going to be this catalyst and these positive news. But if you look at what's happening with the auto market, they are struggling. Many of them will die. They're not going to make it past this scenario, and he's trying to prevent that from happening. That's what he's trying to do. At the end of the day, what's going to happen is this is going to be the greatest thing ever for Tesla. If everything was great, with the interest rates was up, macro was fantastic, all these car companies would have possibly survive. They'd get a lot of investments and they'd be able to make their way through. But the fact is, right now, many of them will die. And when the dust settles and the interest rates come back up again next year or 2 years from now, Tesla's going to be in an incredible position. So it's one of those things where, as an investor, it's sad because we're going to see our kind of stock flat for next year. But when it comes through, we're going to go skyrocket and there won't be as many people out there. Not that we want that, because obviously we want many people to, make this transition through. But just what has happened. So let's move on.
Let me push back one more time. I think that's not what we're saying. That's not what I'm saying. I'm saying that I didn't want a catalyst. I wanted to hold the line. Just present the information with which they did in the report. And if you're asked a question and you don't want to discuss it, you just leave the doom and gloom out of an earnings call, right? That's true, and I'm comfortable with it, and I'm okay with it, right? But
accept it.
Look, yes, I accept it, but look, I actually made money on this drop, so, and I prepared for it. I had sold calls.
Oh, here we go.
Yeah, so don't get me wrong, and I'm happy I'm going to get to buy lower. But what I'm not speaking for myself. I'm speaking for the DMs and some of the market saying that you're going too far. That's all I'm saying is answer the calls, give us the reality, but going so far that we have to defend him as a person. His role as the CEO is different than Elon being Elon. And again, I love that he is the way he is, but perhaps it would be wise to
So I mean, I don't agree, but who should tell him? So you think the board should tell him to shape up and do this?
I think it's just a reflection of himself, for himself. Is I think that, like I said, the decisions that they're making as a company is genius. I think to position the ship to be able to withstand fire, that's great. But to then say that we're not going to talk about the things that we're developing, like robots, or like we don't want to discuss that at all. Well, that's the part of you have to tell that story for the stock to not crater. But I'll buy the dip.
It happened in all the earnings calls that some of the questions were not answered. I mean, I do agree that yesterday wasn't the most joyful one. But what is actually joyful, I think everybody watching this has to follow Jeff's mimics. I mean, Jeff, I love you. There's so much unsaid, and yet there you are. I love it.
That's why I like the format.
Herbert, all I'm saying, when we're coming up with the thumbnail for this episode, I think it's going to be just Xander and the comment, "I made money on this drop."
I made money on this drop. All right. That was a great conversation. Thank you, guys. Let's move on to the next, which is Alexandra Mertz. She's been doing these incredible deep dives and these presentations. They're so good. What's happening in the world right now with the wars, geopolitical risk, and China is very, very critical for us. So just this Thursday, of course, we saw this drop from the State Department saying that there's increased tensions in various locations. They're now recommending that U.S. citizens have to exercise increased caution, those who are overseas. And then there was this news, I don't even know if this is true. Taiwan reports 13 Chinese Air Force planes in its air defense zone. So
yeah, that was last
Alexandra,
night.
Go ahead and tell us your thinking.
Thank you. So yes, why did I want to talk about China again? 4 weeks ago, I did a special on Chinese cars and how they are more aggressively exporting. We actually had some more news that they're getting more authorizations now for different models in Europe. So they're pushing even further. And so I am now having quite a lot of alerts on China. And I realized that they had these 2 last days something that was called the third forum of the Belt and Road Initiative. So before I want to go there, maybe Herbert, can you pull up those numbers on the car statistics, please? So in 2022, of all cars, and I actually like that because Elon reiterated yesterday, he doesn't want us to compare to EVs anymore. He wants us to compare to the whole market, which prepares us for that inflection point in 2-3 years when we will have as many EVs sold than ICE. So 26 million cars were sold in China. And I know some of them are much lower prices than anywhere else in the world, but let's just keep those numbers where they are. It wasn't a huge increase. It was a plus 2%, but on those numbers, 2% make a lot. The United States is about half of that and was in decline. The third position is India. You will see there. I have a second slide where India and Japan are the other way around. Japan being the third one and India the second. But what is important is they're really far behind it, right? Japan is about a fourth of the United States, which is about half of China. And in this chart, if you want to make it a little bit bigger, it shows which were the top brands that sold. And I can tell you one thing, that's not going to be the same ones this year anymore. So in China, it was still Volkswagen, then Toyota, then Honda. In the United States, it was Ford before Toyota and Chevy. And in Japan, it was Toyota before Suzuki and Daihatsu. So, and fourth country, India, and fifth country, Germany. So China is the main car market. That was important for me. And then I thought I have to concentrate more on China, and I want to bring to you what I know about this Belt and Road Initiative. So the last 2 days, and you may want to start, Herbert, with that nice picture of that bridge, bridge or whatever it was. This is the entrance portal of what they called the third forum of the Belt and Road Initiative. So what is the Belt and Road Initiative? It is comparable to what we know in the United States to Build Back Better and what the Europeans know as Globally Connected Europe. So all this happened after the great financial crisis in 2013. So Belt and Road Initiative had this year its 10th anniversary. It was initiated in 2013. It had a first forum 4 years later in 2017, a second in 2019, then COVID hit, and this was now the first one post-COVID. 140 dignitaries from different 140 countries came there the last 2 days to Beijing, and this included Putin. And so what is this all about? So if you want to show that first map, Herbert, which is that gray one exactly. So initially it was all about, in 2013 when they started, making better railroads, making better roads, developing ports for maritime ways. So it was building better connections between China and its main trade partners. It was built a little bit on this old story of the Silk Road, and then should have done that. So that was the project 10 years ago. Can you please move one ahead? So that this one would be good if you could make it a little bit bigger. So this is the map 5 years later, not now. You see in dark red the railroads that have been done, in the lighter colors those that are currently in planning. You see pipelines. You see how it crawls through, and you also see that there have been quite a lot of projects already in Africa and starting in Europe. So everybody will say, okay, fine, what's this all about? The next chart, if you don't mind, because I don't want to keep you for too long. So just so they understand, when they started this in 2013, there were 80 trains going from China to Europe. Now, 2021, there are 15,000 trains per year going from China to Europe. So this has really had the success that they wanted to, and the same obviously in container ships and in lots of other aspects of what they're doing. I'm getting to the other ones. If you want to continue one more, this is the most recent map, and I think this map is actually quite impressive because it gives you a couple of information. Every dark green country, so Russia, but also South America, obviously United States, Australia, and whatever, has China as its number one trading partner. Okay? China as its number one trading partner. And then when it's middle green, it's number two trading partner and whatever. All the yellow lines here are now developed. Roads, railroads, other roads, tunnels, whatever. And all the blue ones are ports that they have a major influence on. As you can see, it has now expanded beyond that, thrive to some African ports and European ports. It has now gone to Latin America and further, including the Panama Canal. If you want to continue, please. Because it shows here now all the countries that are now in this Belt and Road Initiatives. Now, you have to understand, this is not, like a NATO, a defense political system or whatever. This is economical, but it comes with so much more baggage to it. So these are the countries now included, and you see that we have South American countries, we have Central American countries, we have Caribbean countries, we have now nearly all of of Africa, we have Italy, Greece, and Portugal in Europe, and then we have obviously lots of Eastern European countries as well, and the Middle East. So it's about railroads, it's about roads, it's about tunnels, it's about ports, it's about airports, it's about power plants, it's about oil pipelines. So we're having now about 200 cooperation agreements with 152 countries in the world, 32 international organizations, and the trillions involved. So why is this all so important? Well, it gives China market access. It gives them market shares in those countries. It secures trade routes. It secures energy supplies. It secures raw materials. It helps China export whatever they have in overcapacities. It helps them being employed in construction projects for which they have deep knowledge. And it also helps them to shape their foreign policy designs. So what came with it is that they are actually lending in a much easier way than the Western nations. So lots of developing countries, which often have very good mineral reserves, are now tied to China for their own economic development. They are getting money from China, and there is now this term of debt trap diplomacy, meaning these countries contract easier to obtain loans from Chinese banks or the state, and often at below market interest rates. With much less contingencies what the Western lenders would give them. Often there are no questions asked, but then the fine print includes that if you fail to pay, well, the assets go over to the Chinese lenders. Now, this happened in a couple of cases. I followed a case very closely a couple of years ago, just pre-COVID, for an airport in Nigeria, which in the end they settled for some extension of the loan. But it comes also with other political assets. So we had in 2018 the Dominican Republic clearly saying that they're not maintaining any more ties with Taipei, and that they declared that Taiwan now is part of China. Honduras followed the same in 2023. So when the debt they have to China becomes bigger, you see these movements. But at the same time, we also have to respect what the Chinese did here. The Chinese used their strength of their economy in the 2010s and successive years, and the strength of their currency to invest and to invest abroad and to share all this money that they made with more developing nations. So, I'm a little bit divided between just criticizing it and seeing the danger of it, because I have to say they did a lot of good that other people, I will come to those pictures, that other people didn't see. But what happened as well is some of those stuff defaulted in Zambia, notably in Sri Lanka. We know about Pakistan. They did renegotiate that with Ethiopia. So it's not all good, it's not all bad, but it extended the span of China. And there are now 152 countries that either owe money to China or are directly linked to trade with China in a way that it wasn't before. So this tripled the trade value. This is exactly the graph that you should have brought up. Thank you, Herbert. It tripled the trade value between these 152 nations and China. So there's just enormous growth here. And then you will see a couple of examples what we're talking about, if you don't mind showing those. Oh yeah, and these are the debts. So the highest risk loans that China has given is with Russia, then Indonesia, Pakistan, Iran, Nigeria, and then come all the other countries that you can imagine. Maybe we want to go one further. Oh yeah, these are the big loans that they've given to the African countries. And, obviously we have to also ask ourselves, why was it not us or the Europeans who did it, but there we are. And this will give them good access to all these. So this one is in Nairobi. They built the street, the expressway that was built by China Road and Bridge. Then the next one is, if you don't mind, that's the train running from Mombasa to Nairobi, the rail track in Kenya, next to a zebra. That's Chinese. This is in Uganda, one of the old oil fields, that is Chinese. You have here in Indonesia, the construction of the railway, that is Chinese. Then you have here a tunnel in Bangladesh, that is Chinese. And then you have here, that's in Egypt, if I remember right, in Cairo, yes, the business center, that is Chinese. And then you will have, I think there is one more, if could have been up, maybe we're at the end. Okay, so my point is, China has really built out a relationship over the last 10 years that I don't think everybody here in America and in Europe understands the same way they did it. None of that was free, but it was much easier than what people were used to. And it has managed to build ties with countries that were felt left out of our Western thinking, or didn't have the same support they needed. And China knew how to do that. And I think it's actually, if it is purely economically, probably something good. Now, the risk obviously coming with it is that huge debt and the political risk that comes with it.
Wow. What is the
Xander?
what is the thing that so obviously it's a huge thing, and there's a risk between them doing something with Taiwan in the middle of all this tension. They are very powerful, but yet their economy is in shambles right now. Like dramatically, they have to do their own version of raising money. They're in deflation, but Tesla is very, very connected to all this. What's your thinking about how this is all going to play out?
Yeah, but what I was watching these last 2 days, and that's why I wanted to talk about it this week, is because it took place, right? So I listened to it. There were actually some. I watched some of those videos that came out of it. It was really strange because you had this huge table in the middle of a 10 times bigger room where these dignitaries were sitting quite apart from each other because obviously, COVID risk, whatever, they didn't want to have masked people there. And you had Xi on a podium, I don't know, 20 yards away, really far away, talking to them. And you had some of them playing on their phones, some of them listening, some of them falling asleep. It was a very strange feeling. You had the feeling people came there because they knew they had to be seen there, right? You had all these heads of state that needed to go there, yet you felt a very uneasy feeling. At the same time, you're completely right. China feels currently a domestic economic slowdown, has to address the issues they have in their own real estate market, doesn't have the liquidities they had in the good old days, also has obviously a damaged international image. At the same time, and because, I don't have a solution for that, I'm watching what's happening. At the same time, you just heard a lot of Chinese suppliers to Tesla reaffirming that they will build around the Tesla Mexico factory their own build outs. You see these factories linked to Tesla as euphoric and as capable of investing as ever before. So I do still believe that Tesla has a very privileged situation in China and a very protected situation. But it is true that China is not doing these things without second thought. They're not just generous. They are having an interest, which is normal. Americans have an interest as well. Europeans have an interest as well. We just need to be aware of it. And I mean, I have no solution. I just want to make sure we see this and watch it and keep it on our radar.
What kind of
I'll just make a
strings
quick
come?
comment. I'm sorry.
Let Jeff do it before he might need to leave.
Yeah, I do need to pop off. Thanks, Alexander, for going through this. I think it was great information for us and for the audience. There's just inextricable linkage here. This started actually many years ago, and I mean I can tell a longer story if we had more time, or if I had more time. But yeah, your point about China wants something out of the partners is very true, and you can look at it in the case of the mobile phone industry. They pulled a lot of people in very early, and they learned a lot of information, and then they built their own industry. And if you look what they did with Tesla very early on, they courted Tesla very early on and gave them a lot of, I would say, a lot of items that they don't normally give up with working with other partners internationally. So you got to watch this. This linkage is only deepened over the last couple of years, and then it's allowed their ability to be more and more provocative in other areas. So I think that's the key thing to watch. There's a lot of decoupling occurring right now from a supply chain perspective. China's feeling it. That's why one of the reasons you've seen this frog march of CEOs going out to China and having conversations. They're feeling it. So something's going to come to a head here pretty soon. But it should be obvious to most, like what you showed there, that they've grown, their presence has grown all over the world dramatically over the last decade. It's something we have to keep.
And something's simmering, right? I have this feeling something is really seriously simmering. I don't want to be, over pessimistic about it, but you just, why all this? Where are we? what happens if rates continue to rise? I mean, China obviously has a completely other approach to rates than the United States, because they just, they cut rates whenever they feel there's an issue. But it is frightening because it has just spread so far. Xander, you had a question, and thank you, Jeff.
Great stuff. Great stuff. Thank you.
Yeah, I was just wondering, like, what kind of strings come with it? Are there examples explain, like, on 5, for them to give out these big loans? And I mean, is it some sort of control? Is it future potential, or what
Yeah,
is
I
it?
mean, not all of the loans. Goldman Sachs did a very extensive study, which is publicly available on the fine print of these loans, and not all of them have this immediate pursuit to get the assets in case of default, but lots of them do, and they were very strategic, especially for ports. Ports where transactions happen, where merchandise leaves and enters a country. I think ports is really an important point of their expansion. And then the other thing was obviously that the Dominican Republic was the first one to just publicly say Taiwan is part of China, and that was at the moment when they wanted to obtain financing in 2018. And then Honduras, who is obviously in a critical condition at the moment, did the same this year. So you have sort of this political bargaining that is happening. Cuba is one of their partners, which is physically the closest to us, right? So, I understand that the United States is not going to invest much in Cuba, so it's open for China to do it, but it is so close to Florida, right? So you just have to wonder why they do all that.
It's powerful. I mean, it's a good way to explain it, because I think we all kind of knew that this was happening, but you quantified it. You showed exactly which countries.
Yeah, and it's 10
and
years
the growth.
now.
Yeah, the growth is tremendous. So we have to pay attention to this. Right? You said that China and Tesla have a privileged position, and so hopefully that remains. But right now, it really is looking like China is helping Tesla, and it's not going to be an issue. Yeah.
Yeah, and
Wonderful.
I think Elon is playing this actually very well. I think this is actually one of the things when people complain about him not being able to communicate. I think Elon is very smart how he plays it with the Chinese.
And he has relationships with not just the Chinese, but also every country. He's really shaking the hands, establishing good relations. Okay.
Yeah.
Thank you so much, Alexandra. These deep dives you do are so wonderful, and we really appreciate you. Folks, if you're watching this, you got to follow Alexandra, Tesla Boomer Mama on X, Xander at R6Alex, Jeff Lutz at the Jeff Lutz. You can see the CyberBulls. We're actually, very full of data dense. And so watch us every Tuesday. We have a space at 3 p.m. Pacific time on X. And then we also have this show. Thank you, guys. Thanks, everybody. Bye.
Thanks. Bye-bye.